Hi, please pause this video and read the disclaimer carefully before going ahead. Thank you. Hello everyone, welcome to lecture 3, Opening Gaps. Well, opening gap is a gap in a security which takes place on a large momentum than a common gap. We have already seen the common gap, but here the gap, takes on a very large momentum in comparison to that of a common gap and occurs when the opening price on a gap is higher than the high of the previous session for a gap up or lower than the low of previous session for gap down. Okay, so in simple terms, here you can see the day one is a green day and day two, the market gaps up completely. That is, the gap is completely outside of the range of day one. If you draw, high and the low lines of the day one, then the day two is completely outside of the range of day one, right? Here it gaps up, completely outside and above the range of day one. So we call it a gap up. And here in the scenario 2, you can see if you draw the low of the day one and high of the day one, then the day 2 is completely outside it, right? And it's below the low of the day one. So it's a gap down. Basically, it's very simple. We have, seen, we can easily spot these kind of gaps using naked eye. Okay. So the important thing is that you should know that these gaps have higher momentum and they can generate multi-day moves. Even the intraday moves are strong. You can get 2 to 3 strong intraday swings, which you will see in the intraday module. So as of now, and you should also remember that these gaps, occur not in the choppy market environment, right? If it's in a choppy market environment, then, it's a common gap, which we have seen earlier. So here it's not in a choppy market environment. So what causes opening gaps? So there can be news. News are the variables of the opening gaps, like earning reports. So during the earning seasons, you will see opening gaps, very frequently on several securities. So earning reports or earning warnings, right? By earning reports, I mean if the earning, if the outcome is more than the expectation of the analysts, you may see, or a much less than the, what the analysts have predicted, then there may be a gap up or a gap down. Or earning warnings, upgrades or downgrades also lead to, these opening gaps with good momentum for multi-day moves. Buyouts, mergers, weathers, geopolitical concerns like we saw in the COVID, all the indices, everything was gapping down all of a sudden because of the geopolitical concerns, because of the COVID. Then, when, a company is awarded a large manufacturing contract, FDA drug approval or failure to approve, right? So, if there is a failure to approval or there is a drug approval, news like those, always, leads to the opening gaps. Now, the how do we trade them? This is the background which we need to understand. How do we trade the opening gaps? So basically, if you track the news, if you know the news, what the news is, that is one way you can, be aware about, what kind of gap is, there in a security, right? Or what kind of gap, if it's there, can be the cause of it and whether it will have a multi-day move or not. But we are not going to just jump, in the trade just because of the news, because we don't trade, I personally don't trade the news, I trade the reaction to the news. So we will be looking for two things. One is the technical pattern and then a news catalysts, right? So we will be having two variables for these kind of trading the opening gaps. We need to know the news and we need to see the technical pattern. When both the news and the technical pattern is present, then we can enter the position with confidence with the timing tools which we will be using. Right, further in the course, I'll show you some of the timing tools which we will be using, and even if we will study them in the intraday module as well. So you need to have technical pattern and a news catalyst. The news catalyst can be any one of these. If you're good at tracking news, there are several websites where you can track the news and it's a positive news or a negative news. If you have a positive news and if you have a technical pattern which suggests a buy, then you will go for it. Okay, and if your technical pattern suggests a sell and you have a bad news, then it's a go-go situation for a short. Okay, so let's see one example over here. Here we have got Paytm. So in a Paytm, we were having, it was completely in a downtrend and we were having a technical pattern, which we will later on study. So here we are having a technical pattern for the sale, and then some news came around, a lot of news were coming on Paytm on a daily basis, right? So around 15 or 16 November, I didn't took this trade, but, I was monitoring Paytm. So on some news, here you can see it's completely gapped down around 600 level. And then, some news came around, November 15, 16, a lot was coming on Paytm every day. And then, it completely, crashed, right? Almost, 10% move, 8 to 10% move, I assume it's over there. So these, gaps can lead to multi-day move, right? You can see this move is going on, and God knows where until where it will go. So this is what, a gap like this, which comes on a higher momentum. So we should be looking for a technical pattern and then the news catalyst. And when you see this gap is not in a trading environment, in a choppy environment, right? There is no overlap happening before, right? It's all, the gaps. It's not in a rotating market environment, in a chopping marketing environment. A big gap, even on the day of the gap, there was good intraday move to be captured, which we will see how to do that. And then on a, then it, declined. So a multi-day move can be expected out of all these gaps. And swing traders who are good at, reading the market news, if you can interpret the news well, then you can combine the news with the technical pattern and enter a trade for multi-day moves.